Managing accounts payable can quickly become a headache for growing firms. As invoice volume increases, manual processes create delays, errors, and lost visibility into cash flow. That is where automation tools come in. Two major players in this space are Bill.com and QuickBooks' built-in accounts payable features. Both aim to make paying bills faster, more accurate, and easier to track, but they take very different approaches. Understanding those differences can help you choose the right fit for your firm's stage of growth. Bill.com is built from the ground up for accounts payable automation. It captures invoices automatically, writes them through customizable approval workflows, and lets you pay vendors by electronic transfer, check, or virtual card. Everything happens inside one dashboard that syncs with your accounting system, so there is no need for manual data entry. One of its biggest strengths is how it handles invoice capture. You can forward invoices by email, and the system extracts key details like vendor, amount, and due date automatically. This saves hours of typing and reduces data entry errors. Bill.com also allows multi-level approvals, which means different people can review and approve payments based on amount, department, or vendor type. QuickBooks, on the other hand, is first and foremost an accounting system. Its accounts payable features are built directly into the software. You can enter vendor bills, schedule payments, and record transactions all within the same environment where you manage your books. Because AP is already inside your accounting system, it automatically ties into your financial reports, general ledger, and cash flow statements. That means fewer integration issues and no need to sync data between platforms. QuickBooks also supports third-party add-ons if you want to expand its automation capabilities. Some of these add-ons can add invoice capture, approval routing, or advanced payment options, bringing QuickBooks closer to a full automation solution like Bill.com. Both Bill.com and QuickBooks help growing firms save time and reduce manual work in accounts payable, but they serve different needs. Bill.com is the choice for firms that want a dedicated automation engine, something that can handle high invoice volumes, multiple approvers, and vendor payments with minimal manual input. It offers more visibility, control, and efficiency, especially as you scale. If your firm is starting to outgrow manual bill entry and wants to standardize approvals, Bill.com will likely be the stronger long-term solution. But if you prefer to keep everything integrated inside your accounting software and handle moderate volumes easily, QuickBooks' built-in AP tools will do the job. Either way, automating your payables now will free up time and improve accuracy as your firm continues